Singtel is allocating 2 billion Singapore dollars to a share buyback scheme. This after posting a yearly net profit of $4 billion, which is 5 times more than the previous year. The telco made an exceptional gain of $1.55 billion, mostly from a partial divestment of its Comcentre building near Somerset. Analysts say its latest performance has put the telco in a strong financial position. Nicolas Ng with more.
Singtel's bottom line was 2.7 billion Singapore dollars at the end of financial year 2025. That's not accounting for one-off gains, like its partial divestment of the Comcentre. That's 9% more in underlying net profit. The company's group CEO attributes this to strong growth from its Australian telco Optus and Singtel's other overseas associates. 2 other fast-growing business arms, such as its IT subsidiary NCS, also contributed.
That has grown very well last year, delivering us a 39% growth in EBIT, and we continue to expect that to grow. The second area of growth engine is really on digital infrastructure, namely the Nexera business, which is data centers, not just for Singapore, but for the region.
Nexera is expected to turn on more data centers, including one in Tuas and a campus in Johor. One market watcher says Singtel has more growing to do in the years to come with these upcoming projects.
So if you are asking me data centers impact, we will feel the impact mostly and big time in FY27, not this financial year, partially in this financial year because one quarter, but essentially over the next 2 financial years. So, in the meantime, we got NCS contributing, and then over the next few years, we'll see data center.
Singtel has also expanded its asset recycling target from around 6 billion Singapore dollars to around 9 billion in the medium term. It will also help fund the share buyback scheme. One analyst says that it's a vital tool for the company.
The share buyback scheme is something quite essential now at this point in time for Singtel, so that they can continue to enhance shareholder value, because the main thing about share buyback is that you can reduce the number of shares in very simple terms, so that the earning per share can increase and also the return on the shares can also increase.
The scheme will take place over the next 3 years.